Hello guys, welcome to our YouTube channel. Genesis Forest Capital right here, and I bring to you good tidings, guys. So this is part 2, like I had promised. This is part 2 for the order block lessons that we are currently taking on. So without further much ado, let's quickly get started. So the previous class, right, I spoke about order block, and I said we had two types of order block: the bearish and the bearish order block and the bullish order block. To get more details about the part 1, go to the channel and then you'd see it. Let's dive into today's class. So today is the part 2 of the order block lessons. I'll give us another criteria that makes an order block valid, because the market is full of orders, different orders in the market, but you have to be careful to be able to pick one zone or a particular zone that is good or that will make your order block valid. So number 1, I said it was break structure. That was last video, the previous video. Then today's criteria is your order block must be unmitigated, right? An unmitigated order block has a very high probability of picking your orders, or it gives a high probability for you to trade. So guys, let me give a template first, because that's what I like to do. I like you to see or imagine a particular scenario before we dive into the chart. So now this is the market is buying, right? An unmitigated order block is the kind of order block that the market has not touched, right? The market has not touched or retested that zone. Now let's assume this is an order block. This market now, the price is coming, it has touched it, goes up, breaks structure, comes back again to touch it. Now this place becomes a mitigated order block. Once the market had come to that particular order block in the past, and the market is coming again in that zone, it becomes how would I put it? It becomes invalid, right? It becomes invalid. So that is the logic of what we call mitigated and unmitigated. So the market created an high, this is an order block. The market had not touched that order block, right? Market goes up to break structure and then comes back down to mitigate that order block, right? So the market can go up like this. So that is what we call an unmitigated. It means the market has not retested that order block. Can you see? So this order block becomes a very, very high probability to trade on. But if the market retest like this, then goes up, breaks structure, right, then comes down back again to retest that particular zone, you see that this place becomes a mitigated order block, right? I'm not saying it is not good to trade it, but it doesn't give a very high probability to trade on, right? So something like this, it's actually risky in my opinion, right? So we don't want a mitigated order block, we want an unmitigated order block. What does it mean? It means that the market had not retested that zone. Something like this. You can see this zone is fresh. A fresh zone, that is where you should look at to take your trade from more often, right? So an unmitigated order block is is another block that is the market has not retested or touched before, and that makes it very, very, very valid, right? Now let's go to the chart. Let's see if we can get an order block. That's number 1. An order block must break structure, right? And number 2, an order block must be unmitigated. It means the market must not touch, or the market had not touched that order block in the past, right? So now let's look for what we can call an order block. The first lesson of, okay, we've seen our order block here. We've seen our order block here, right? And we've seen our order block here. But we said for an order block to be, remember I said we have different kinds of order blocks in the market, right? You have different kind of order blocks in the market, and you have to be very, very wise to pick from which order block you want to trade from. So we have this first order block, right? What's an order block? The last, okay, this is the bearish order block. The last up candle before the down move, the last up candle before the down move. So we have 2 order blocks consecutively here, but we have to pick one, or should I say which one should we pick, and what is the criteria for us picking it? Now you say another block must break structure, but this one there's no break of structure in this other block, so which means I'm not looking at this place as a valid order block. For me, in my opinion, it's not valid. Now let's look at the second one. Did it break structure? Yes, it broke the structural low, right? It broke the structural low at this point. So once the market breaks a particular low, it is okay, right? It is okay, which is criteria number one. It must break a structure, right? So we've had the break of structure here. Criteria number two, which is today's lesson, I said it must be unmitigated. It means the market price wouldn't have got to that order block in the past. So this place is a fresh order block, right? It's a fresh zone for the market because it is unmitigated. The market had not gotten to that zone in the past. So now what do I expect? I expect something like this. Since we have gotten our break of structure, right? Break of structure to the downside, we expect something like this. Boom, right? So this could be what we are actually expecting. This could be what we are actually expecting because this place is a fresh order block and the market had not mitigated that order block. It's a fresh, unmitigated order block. So we've gotten number one order block, right? Let's see. Right, this place could be used as an order block. In fact, this place is an order block. This is daily time frame, right? So which means we can go to the 4 hour time frame, we can still see more opportunities, right? So in this case now, you see that the market broke structure at this point. This particular order block broke this structure. Or should I say, let's go to the daily time, let's go to 4 hour time frame for more clarity. Let's go to the daily time frame. Right, so we have our order block at this point here. Now this our order block broke this particular structure, right? So you can see this order block broke this structural low, right? So we should be expecting a sell from that order block. Why? Because this order block has not been mitigated. The market price has not gotten to that zone in the past, so you could expect something like this, right? Put your stop loss here and probably just sell down. So let's zoom. If you can see, okay, this was what we're talking about. Okay, we are done with that. Let's go to this one. This is what we are trying to look at for. This is 4 hour time frame. Let's see if we can get a good order block from this point. This should be our order block here. Let me zoom in for us. Right, okay, so I'm sure you can see it clearly now. You can see more clearly. This last up candle before the down move is recognized as our order block, so we can plot it out. We've plotted out our order block, right? This is bearish order block. The last up candle before the down move I explained in total in the previous video, which is the part 1, and that is it. Then the first criteria, it must break structure, right? Your order block must break a structural low or structural high. So it's broke this particular structure here, right? It has broken the structure. Now let's zoom out to see if we can. And this order block, it is mitigated, right? This order block has been mitigated in the past, so which means that the next zone would be not too valid, right? To me, it becomes less valid or invalid, or whatever I want to call it. Now this is what I'm talking about, mitigation. So this is an order block. The market retraced a bit and then mitigated the order block immediately, right? So this is a mitigation. It means market has retested that order block and it dropped, so which means it is no longer valid in my opinion, right? Market might come again to that zone to sell, but in my opinion it is not really that valid, so I'll skip. So let's see what happened. You can see what happened. The market came and it was finding it difficult to actually sell from that zone. That is why, because this place had been mitigated and the market had dropped from that place. So which means this order block is not valid. That is what we call a mitigated order block. So you can see the roller coaster of price around that zone. The range and up consolidation is because it has been tapped in the past, it had been mitigated in the past. So you cannot compare to this particular one here, to this one we did on the daily time frame. right? Look at this one. This one is not. This one has not been mitigated before. So this one has been mitigated by this particular movement. So which means I would not consider it as a valid order block anymore, right? So there's no other great order block to trade from that zone. So probably skip that process. Okay, so let's look at more examples of using order block. Let's look at more examples this for let's see. Alright. So we have this guy. We have this part. Let me take this off. Okay. We have this order block here, right? We have this order block. So the goal of this video is to let us know how to plot an order block, which we've done in the past, and the difference between a mitigated order block and an unmitigated order block, right? So we see that we had an order block here. The market came down, went up against the order block. There is no valid break of structure. If you ask me my opinion, there's no valid break of structure because this particular high created this low. The market broke this low, then went up again. It's not that valid if you ask me. It's not that valid if you ask me. And if you elongate it to this point, you see that okay, this particular high created this low, right? Created this particular low at this point. So you see that we had a break of structure here, though it had been mitigated already. So you can see the difference now. So all these other blocks, they've been mitigated. It means market had retested that particular zone. So this other block has been mitigated by this zone. Then we can also see our second order block at this particular zone too, right? So we see our order block at that zone. So now, like I said, the main aim of this is to let us know the difference between a mitigated order block and an unmitigated order block, which is the criteria in which we can actually take a valid order block from. It must not be mitigated, right? So we have this order block, the last up candle before the down move, right? And this move broke this particular structure here. It broke this structure. That is criteria number one. It must break structure, right? It has broken the structure, and then it's retested at this point. And even you see that it also mitigated this one. So this other block was mitigated by this one without any break of structure. This other block was mitigated by this other block without a valid break of structure. So I wouldn't want to take this trade, to be honest. I wouldn't want to take this trade because this mitigation had happened before. And you see the market came and also mitigated the second time, came again, and you can see it completely took all these other blocks out. I personally wouldn't have taken this trade, trust me, because of the mitigation that had happened before the break of structure. Don't forget, let me give us the template of what we are talking about. Something like this, right? This is what we're talking about. This is an order block here, right? So we have an order block here. We don't want the market to get to the order block first. We want to see something like this, a fresh order block, right? The market had not touched before. So something like this. This is what we can be expecting, right? So don't forget, once you see that the market or price had retested a particular order block before, we're not interested anymore. So it could be like this. We want this place to be fresh, right? This video is already getting too long than I want. So we want this order block to be fresh, right? That is just the aim of the unmitigated order block. So if you are to sell, want a break of structure. Let me take this out. If you are to sell, want something like this, where the market had not tested the order like this, something like this. This is what we are looking for. Okay, right? Something like this, where the market had not touched our order block before. So this is what we call an unmitigated order block, right? So something like this. We don't want multiple sales from that zone. We don't want multiple sales from that zone. We don't want multiple sales from our order block. We want our order block to be fresh and untouched, something like this. Can you see? So this is an unmitigated order block, this is an unmitigated order block, and that is what makes an order block valid. So in layman language, we don't want an order block that the market had retested in the past. We want a fresh order block, right? That is what make your order block very, very valid. And you could take a trade maybe once in a week. It's not bad. Look at this one. This order block was mitigated by this one before the break of structure. So we want to see a break of structure first before the mitigation, but it did not happen here. The same thing with this place. We had the mitigation before the break of structure, and that was why you see that the market did not drop completely. The market kept on coming up and up till it wiped all this order block away, right? So that is just the aim of the order block. So now this is an example of a fresh order block. We have break of structure here, right? We have a break of structure here, then we have this order block. We have this order block at this particular point here, right? Something like this. So you can see that the market had not touched this order block in the past. So this could have been a very, very good place to take your trade from. So we could have seen something like this. But in this case, I think it was kind of liquidated. I don't know. It depends. So, but you can see the scenario of what we are trying to do. Something like this. So this is what I think a lot of people might have. It depends on how you put a stop loss. So something like this, you can see. So this is just the perfect way on how we want our order block to be. Number one, we said our order block must break structural high or structural low. It must break structure. This is the break of structure, right? It is very simple. This order block broke the structure, number one. Number two, this order block was unmitigated. It means price had not got into that order block in the past, right? Price has not got into that order block in the past. And when price dumped into that order block, you can see how it reacted immediately with a momentum candle. So that is the power of an unmitigated order block. Part 3 will be released few days from now. Part 3 will be released few days from now. So I want to take you guys step by step on how you can make a good entry using the concept of the order blocks. I think a lot of people are taking this with a whole lot of naivety. They don't have the in-depth knowledge on how to take trades using the order block. So this is criteria number 2. Make sure your order block is not mitigated or has not been mitigated in the past, right? So see you guys next week, or in a few days time I'll be dropping the part 3 on how to take an entry from a valid order block. See you guys. Peace out.